Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and first of all let me wish all of you all on behalf of our company Geojit Financial Services and myself season's greetings and a very happy Diwali and a prosperous new year to all of you all. To start off with the market outlook, well, the momentum has continued on the upside this Monday morning, that as I speak to you at around about 11:15. Continuing the upward move that we saw last week. Uh, to give you certain levels, well, the Sensex is up about 280 points. 64,640 is the level on Sensex. Nifty is up about 90 points. 19,320 is the level on Nifty. Nifty Bank up about 125 points. 43,440 is the level on Nifty Bank. Rupee is trading with strength against the dollar of 10 paise. Level is 83.19 rupees to a dollar. And on the Brent and NYMEX, last week we saw a sizable correction. This morning trading with a marginal green uptick, but relatively in that safer zone. Brent is at about $85.30 to a barrel, and NYMEX is at about $81 to a barrel. Expecting that the news flow from the Middle East doesn't disturb this downward trend, we could possibly see some more lower levels as far as crude oil is concerned, subject to, of course, no negative news coming through from the Middle East or any kind of supply cuts from the OPEC plus. If you recollect, friends, last week when we were interacting, we mentioned about certain levels, 18,800 being a very strong downside, which will be difficult to be breached by the bears. And after touching that low of 18,850, 18,860, we have managed to maintain and gain that momentum. And the good news is that we are trading about above that 19,200 mark on the Nifty spot. The next level to test will be 19,400, and if we are able to take that off in the coming days, then our sense is that the recovery could take us a little bit more higher from here on. But why these levels become important? Because 19,400, 19,200 was the zone which was not breached, and once it broke, we saw much more lower level, and hence that significance of 19,200 and 19,400. So if we are able to take that off decisively and give a close above 19,400, then there is likely possibility that we'll see much more higher levels from here on, slowly and steadily. On the other data points, well, we are in the last leg of the second quarter earnings, and whatever we've seen up till now has gone down well with the markets. Let's hope that whatever remains also does not give us any negative surprise and is in line with what the street estimates are. A lot of global events lined up this week, starting with US, Europe, Japan, China. Of course, the speech from the Fed chair, other data points in the Eurozone, and of course Japan and China. So possibly this week is full of global events as well as domestic data points will also come through. So markets will possibly be tracking out over there. In terms of selling activity from the FIs, well, they have been selling quite a bit. But the positive side is that the domestic institutions have been able to take all that pressure. And that is the reason why our downside was protected, despite that huge FI selling, not only in the month of October, but also starting in the month of November. IPO subscription has gone down well. There are a lot of new listings this week, and there are a lot of IPOs that are open for subscription. So there is going to be a flood of new listing once these IPOs are subscribed, done and dusted, and the listing process starts. Overall, friends, on the market front, don't see any huge negativity, and our estimates are that we should possibly be crossing over 19,400 and moving gradually higher going forward from here on. Like always, we give you certain investment ideas. Last week also we gave two of them. This week also we have two investment ideas, again from different sectors, of course. But mind you, friends, these are all fundamentally strong investment ideas. You need to have longish time horizon. This is not from short term, medium term, or intraday. So please bear that in mind. The first one is a metal large cap company called JSW Steel. after seeing a significant upside, we've seen some downward correction on fallback of domestic news flows, on fallback of global news flows. And we find opportunity in this kind of downward moves to possibly identify certain investment ideas which will be rewarding over a longer period of time. So first one is from the metal pack, JSW Steel. The second one is a mid cap or a small cap cement manufacturing company, not really spoken about much. The name of the company is Sagar Cement. Uh, we expect the consumption of cement to go up, keeping in mind the recovery in real estate sector, capex investment by private sector, government spending both at state and central level. This government spending and the spending from the central level may come to a little bit of slow speed because of the state election and code of conduct getting implemented. But post that, our sense is that the way the cement consumption has gone up, along with that, we've seen slightly up move as far as cement bag prices are concerned. And we feel that, amongst the mid or small cap universe, we need to identify strong names that will be rewarding over a longer period of time. So the second investment idea is Sagar Cement from a mid-stroke small cap universe in the cement sector. Sizable presence and of course a decent number in terms of earnings is what we've seen, and expect this earnings to improve on fallback of consumption of cement going up. Again, I'd like to repeat myself. These are both these are long-term investment ideas, so you need to have longish time horizon in mind. Once again, wishing all of you all a very happy Diwali and a prosperous New Year. Thank you very much for your patience hearing, and I'll see you again next week. Till then, take care. Bye-bye.